Jonathan, thanks so much for being with us on Stock Shotz.
My pleasure. Good morning.
Jonathan, we've been exploring the inflation-deflation debate. Do you think we'll see continued deflation, or do you believe that inflation will take hold within the next 12 to 18 months?
James, I got to tell you, I don't know. I don't know. I'm not an economist, and I'm a trader, and my first level of analysis always comes from the price action of securities themselves and not a macroeconomic perspective on the overall economy. I mean, certainly there are some inflationary signs. In the last couple of weeks, we've started to see gold, for example, begin to pick up. Started to see the action in the Treasury bonds, which had been very strong, begin to crack a bit. But I don't analyze the market by taking a big picture, wide macroeconomic perspective, and then drill it down to try to analyze, well, what investment should you buy or sell? I start with that. I start with the price action of the securities themselves, and lead the big picture analysis to I say this respectfully, but like the Diane Swanks of the world. You know what I mean? I've frankly never met an economist who's there's terrific economists, but I don't think they're great investors, most of them. So it's hard for me to get a good read on the inflation picture. I tell you, it's obvious, I think, to most of us that the government really is now the major starring actor in the financial markets. I mean, they are calling the shots in real estate, in finance, in banking, and ultimately I think that intervention, if you look at history, is likely to produce a massive amount of inflation. Might not get it this year, might not get it next year, but in my 2 cents would tell me it's probably on the way.
Well, and, that has been a scary thing to me, to see the continual government intervention. We had Jim Rogers on the show last week, and he still contends that the government should have let some of these companies fail, and that we should have started over from a sound base. We've seen our policies move more toward what I would call socialism. Do you think this is going to destroy the value of the dollar?
You've hit the nail on the head. I mean, it is. I don't think it's even what you call socialism. It is socialism. I mean, what is socialism? It is government ownership of assets. And, right now in our supposed capitalist country, the government is the major owner in the largest banks. It is a major owner in the real estate finance company and mortgage companies. And, this policy, which unfortunately was started by President Obama's, nominee for Treasury Secretary. I mean, who's the guy behind all these bailouts? It's Tim Geithner. I mean, Tim Geithner is the guy who kind of came up with a lot of these ideas, and he's going to be sitting in Treasury, for assumingly the next 4 years at least. So, it has been disastrous. And if anyone who's a trader goes back and looks at the kind of the internal mechanisms of the market, the credit crisis really started in summer of 2007. But I'm telling you, James, it wasn't until March of 2008 when we stepped in with Bear Stearns that the wheels really fell off the track. I mean, that's where, when you look at the markets, that's when all of a sudden nothing started to work. And how can it? I mean, how can we invest for the long term when Tim Geithner and Barney Frank and Chris Dodd and all these guys are kind of making it up as they go along, right? And that was the whole story of 2008 was like every day you wake up and on the front page of the Journal there's a brand new idea of how we're going to, save the stock market, how the government's going to save the stock market, save the economy. And, $2 trillion later, things are much, much, much worse. So I agree with Rogers. I think that, we should have let, the government should have not intervened in any of these private companies, and we should have started over with a sound financial base. That hasn't happened. We've gone just the other way.
I agree, and I honestly believe had we done that, we might have had some more short-term pain, but I think we're trying to put a Band-Aid on a gash that goes all the way to the bone, and it just won't work.
Yeah, I mean, we're trying to fix capitalism with socialism, and in the process, we're turning into one of those, backward European bureaucracies that we always used to make fun of in this country. And it's real. I mean, I think with the best of intentions, I know, but I do think the government has turned what probably was a 12 to 18 month slowdown into a multi-year. I don't want to use the D word, but let's just say severe, recession, and hopefully not depression. But it's hard to find any immediate signs of enthusiasm on the horizon.
It sure is. Well, let me ask you this. We've had a ton of debate on the show as to whether or not the Federal Reserve is out of bullets, or are there ways they can stimulate the economy. And, of course, it seems like everybody is more scared of deflation than they are inflation. Is the Fed out of bullets and irrelevant at this point?
Well, I'd like to think, people, I think, want to believe, James, that, that the economy is like a lawnmower, and all you need to do is kind of keep pulling that cord long enough that you can get it to start. I mean, the wealth that we've enjoyed in this country, almost since inception, it didn't come from a Federal Reserve policy. It didn't come from a stimulus check or a bailout check. It came from profit-seeking individuals, who are out to innovate and serve customers and make money in the process. And I think, unfortunately, the Federal Reserve policy, obviously there's been a tremendous amount written about how those low-rate policies contributed to some of the asset bubbles we saw in the earlier part of this decade. But I think that ultimately their policies are likely to be tremendously inflationary, hurt the value of the dollar, and do nothing to create wealth and prosperity in this country. Part of what we have to do now as investors is that we don't even, guess the economy. We don't even guess new products and new innovations and earnings. We have to be spending all our time guessing political policy and monetary policy. I think that the constant tweaking and meddling and interference from the Federal Reserve really makes our jobs as investors a lot more difficult and does nothing to better the economic environment here in the States.
I agree totally, and I tell you what, based on my portfolio last year, I didn't adapt very well.
Last year was so unique, right, because nothing worked. Even go back to, I remember, I first started my fund in 2000, and, even as Cisco and Microsoft and all those companies were crashing after the tech, wreck, new bullish ideas were coming up. Small cap, REITs, that's what, even some of the commodities trades, those were really starting back in the 2000-2001 era. What did we see last year? Nothing worked. Small cap, large cap, everything was decimated. That type of wealth destruction only happens when government gets involved.
Well, I hope we'll see something emerge, but I've seen no hope the first part of this year as well.
Yeah, well, one of the good news, pieces of good news, and I'm not like a perma bull by any means, I'm not a perma bear either, but I think one of the things that we have that the bulls and maybe just the people who are hopeful for our economy have in our favor is that, boy, the news is pretty bad, isn't it? It's front page. The pessimism is palpable. People are pulling a tremendous amount of money out of stock mutual funds. Folks are scared. I deal with rich people, people who have portfolios of $10, $15, $20 million. They're scared shitless, excuse my French, but they're scared. And, I think that's actually something we have working in our favor. Obviously, that tends to be a pretty good contrary indicator. So that might be, at least in the short term, one bullish indicator.
That is a good point. Well, I hate to admit this on the air, but I've been buying natural gas through the UNG for quite some time. What's your outlook for oil and natural gas this year?
Well, I owned some natural gas last year. Back when it was significantly higher. And I'd say, James, I don't think I'm always the best investor. Every stock I buy, every asset I buy doesn't go up. I think, one of the few things I have going in my favor is that I'm very disciplined. And when that 15 or 18% gain turned into a 3 or 4% loss, I dumped it. And I tell you, it hurt a lot. It hurts to take a loss, right? It's so much easier to kind of let it ride. Oh, it'll come back. And, that 3% loss ended up, being a godsend because obviously natural gas, I think, declined another 70 or 80% even from that point. Natural gas looks frighteningly inexpensive now compared to where it was, just a few months ago. But I can't really say that it's on my screen right now for new bull ideas. And my thought is, and again, there's a lot of different ways to make money, and I respect everyone. Do your own thing. Everyone's got their own style. Right now I don't see natural gas or the energy complex. Right now it's not in a bull market. When you come right down to it, it is not in a bull market. And my thought is that if you're going to play the long side, you want to be long in a bull market. So for me, I'd probably wait a little longer, but hey, I wish you the best with that.
For the rest of this great interview, visit our website, www.stockshotz.tv. That's www.stockshotz.tv. Thank you for listening.